Well, Vicky Pryce is Chief Economic Advisor at the Centre for Economics and Business Research. Always good to see you, even though it's such miserable news, Vicky. Look, some in the Bank of England are saying, look, we haven't reached the peak yet. Will inflation hit 10% this year?
It could do. I think what we need to remember is that for April, I mean, the figures we just saw were for March, but for April, what's happening is that electricity prices are going up for households quite significantly, over 50%. So, and that's one of the elements which is going to add to the retail price index and to the consumer price index inevitably. And that, of course, means that we could be heading for 8%, maybe 8.5%. And if there are further increases in energy prices or food prices, as we know, global food prices are now at record high levels, that could, of course, lead to even higher inflation. But so much will depend on what happens in the war in the Ukraine and what happens to gas and oil prices, where there is huge uncertainty right now. They could be going up very significantly. They could be coming down, of course.
How long do you think this is going to go on for? Is this something that's going to take us to the end of the year or beyond into 2023 or 2024?
It's entirely possible, but I think most forecasts are for a decline from about the middle of the year onwards, and maybe it will happen. Again, as I was saying, the uncertainty there about hostilities in the Ukraine and the war that's going on at present are going to be a very significant factor. Now, remember, of course, that this is an international crisis. As you were suggesting, this is happening everywhere. If you look at what's going on in the US, they're having higher inflation, which is already over 8%. If you look at Europe, there's been this very substantial increase in the inflation rate in Germany, for example, which went from 5.7% to 7.1% just in 1 month, which was in March. And also you've seen similar increases in places like Italy, a little bit less in France, where they've had a real cap on electricity prices for households. But nevertheless, this is happening across the world. And we've seen, of course, interest rates going up in a number of places, including just very recently in New Zealand and Canada. And of course, the US intends to do an awful lot more there. You mentioned the Bank of England's target of 2%. Well, it's way above it at present. What can, though, monetary authorities do, frankly, because if this is an international crisis, raising interest rates, all it's going to do is slow down the recovery domestically, which will have in itself quite a lot of consequences.
So all eyes on Threadneedle Street when they, that Monetary Policy Committee meet next week. Look, the role of China is something I want to talk about, because that's really interesting, isn't it? I mean, do you think they're going to keep import prices down and cushion the West from runaway inflation, or will that cost them too much?
Well, it might do. But the interesting thing about what's going on in China right now, of course, is that, of course, China has itself been closing down various cities because of COVID, and that has in itself already led to a fall in the price of oil. So we're talking about oil at just over $100 a barrel. It was 139 practically just a few weeks ago. So the slowdown in a place like China is very significant. But of course, this could have all sorts of other repercussions. So if suddenly we have more shortages in terms of the supply chain because manufacturing production can't keep up with the demand that's still there, worldwide, then that could in fact put some input prices for firms and for industry up rather than down. So again, lots of uncertainty there.